I am curious about the divergence that we see within some of this economic data. Housing, of course, just one area where we see strength. Does it worry you that this isn't as broad-based as it should be?
No, not at all. In fact, what you're seeing, in some ways, unfortunately, on the positive side for housing credit in the housing market, this is a world of the haves where saving rates are up and higher income people do have jobs, and so real assets are attractive. On the lower end of the housing market, that's a different story. But again, we see nothing that's going to disrupt the housing market at this point, and continue to find what we call securitized, just generally those investments, as being very strong and a good place to put money.
And so when we talk about, I guess, what's supporting a lot of this, I mean, we have to talk, of course, about the low rate environment that the Fed itself has helped to facilitate. And to a certain extent, we have to talk about, I guess, just the general economic sentiment that both the Fed and, to a certain extent, Washington policymakers, fiscal policymakers have helped to create. Do you worry at all that there's really not enough more for them to do?
Where we're worried right now, certainly is this delay of the fiscal stimulus packet. Our core view is that we need $1.5 trillion really to really get things underway, get that fiscal multiplier going. And the more that they delay, and $0.5 trillion is not enough, and the more they delay, they're going to have to actually do $2.5 trillion to get the same effect. And so near term, with the broader economy, we're certainly concerned about this. And as I say, that lower income bracket, the people that are getting affected by COVID, they need the help to continue to boost consumer confidence. So, the near term risk for the markets generally in risk assets is there's going to be a lot of chop as sentiment goes through. We've had a nice run up, strategically love the markets into 2021, but right now, there are definitely some concerns, and you're going to expect to see some volatility in here.
Volatility that people need to sort of grin and bear to a certain extent. I'm interested in, we spoke about fiscal policy. On the back of that, the consumer confidence and the consumer willingness to spend. We're seeing such a tale of two halves, as you spoke about, when we look at the retailers, for example, and their numbers coming out. How resilient is the U.S. consumer right now without a fiscal package?
Well, the good news is the high-end consumer, or the households, certainly are in great shape. The bad news is that the people that spend the money, tend to be the folks that need the help from a fiscal package. And so, it's definitely a concern as we go through the holiday season, tick up in COVID, these challenges that we haven't seen a fiscal packet come through.